as it has. Thank you. Ladies and gentlemen, good afternoon. As it is now customary, we'll probably give another 2 or 3 minutes for everybody to connect. Takes time for everybody to be able to connect, and then we'll start the presentation. And I will.
Thank you.
As I was saying before, ladies and gentlemen, I just leave another minute and a half or two. I see there's still few invited guests that are joining. Can I ask you to mute yourself, please? Those that are not muted.
Check connect to your audio. Yeah.
Yeah, you wouldn't be hearing anything because we're not saying anything, Leandro. Good afternoon.
Afternoon, Guido. Sorry about that. I wasn't on mute.
No problem, but you wouldn't have heard anything. I think I can. We'll start. Ladies and gentlemen, good afternoon, and welcome to RDC Properties Limited audited financial results for the year ended 2023. I'd like to recognize the presence of few of our board members, Andrew Bradley, Kate Mapache, Federica Giachetti, and Sitabile Mate, that I can see here. In addition to the executive team, Joanne Mabin, Gary Fisher, Jacopo Pari, and the RDC team. There's quite a number of them there. They've been all instrumental to what we're going to present to you, and I'd like to recognize their presence. I'd like to thank the auditors that are present here too. So thank you very much for that. And I now will ask Avi to lead through the different slides. If you can please go ahead. So the presentation will start with a welcome, and then just coming back to the last year. RDC has been growing its investment portfolio and add the value through achieving another milestone, which is a portfolio of 6 billion. We are now arguably the largest portfolio of investment properties listed on the BSE. Our diversification has continued. We have added another country into the list of countries with Zambia, with the acquisition of David Livingstone, as we will hear much more in the detail from my colleagues. We have had a year where we can see that the Croatian assets have grown quite a lot, and that is reiterates the importance of hard currency revenues and properties for the group. There has been a sectoral rebalancing with the hospitality picking up and the valuations too on that sector. So we'll go through that in detail with the team. I'd like to recognize the BAC as being instrumental to what we've been doing through the bond issuance and the work we're doing with them. I will now ask, go on, Avi. Yeah, thank you very much. Last year started, in fact, with a working of a review of our strategy, our status report on where we were in the integration of tower portfolio. And we reiterated our purpose, which is very much to grow shareholders' value by owning and managing strategic property assets that add and enrich stakeholders and the community we serve. We worked on our vision by being a little bit more focused on that and really trying to be the leading real estate company in Botswana. Clearly known for its international reach, expertise, innovation, sustainability, and integrity, and our client-centric approach. The board defined very clear objectives and goals. One of them would be the NAV growth, and trying over the medium term to have a growth pattern that will attest itself at an inflation rate plus 3 to 5%, reduce the loan to value to below 40%. Over time, try to grow the hard currency portion, and the results that you will be seeing will attest to the reason for that, and rebalance a little bit our growth strategy with a more of a value strategy and over time increasing the distribution. I'd now like to invite Jacopo to go through the next slide.
Thank you very much, Guido, and good afternoon again to everybody. This slide is going to present you what has been achieved and brought to fruition during the year, and the effect against the long-term targets of the company. We have sold and transferred non-core assets during this year. We will give you more details as we go along with the presentation. Actually, in the 2023 financial results, you will see a disposal of 138 million, and the funds of which have been used to reduce debt and to improve and reinvest into core assets. And this is clearly accretive to the net asset value per share. Despite of the sales of the assets that I've just mentioned, the core portfolio has grown by 107 million this year, and this is on the back of very strong operation uplift compared to prior year. And it's to be noted that 59% of the investment properties by value were externally revalued this year. As mentioned before, the addition time this one is only accretive from a hard currency point of view because it's USD denominated business, bargain purchase gain to reducing the here we have square meters, which is roughly 25% of our gross lettable area. So it's not a small feat increase the for that, and we can the return to the unit holders. We can move now to the next slide. When we were after COVID, we were thinking that the post-pandemic effect would subside, but actually we have been now confronted with new and different challenges. And this has called for an overall relook at the speed at which a group must react to the changing environment, because changes are happening at the speed which is somewhat unprecedented. We are now still sitting in a high inflation rate, and still interest rates are high.
Definitely.
And in this slide, you will see
Yeah, a
the
little bit
challenges
distracted the
and
last
our
hour because all the funds finally cleared my trading accounts, trying to get the.
If I could ask Simon to please mute yourself.
1 sec.
Right. Okay. Apologies again for that. So we are still within a high interest rates environment, though the outlook is start to ease a little bit. We are very close to pivoting, and consensus is that we shall see a cut in interest rate, which will not only directly clearly help the performance of our group, but also of our tenants, and basically improve altogether the industry metrics. Geopolitical tensions, though they seem quite far away from where we operate, less from Croatia than what it is from South Africa, are actually still affecting a little bit the supply chain, the demand, and especially could have some effects on the tourism, where the tensions to be continued. This has reflected on an unstable currency, especially the ZAR has proven to be the weakest of the currencies we are operating within. And we are clearly facing environmental and climate changes. Our responses, though they are listed like as if they were against the challenges that I mentioned, are holistic. They have an holistic approach. We believe we have a strong and effective hedging strategy. We're looking into the best and most effective contracts to protect ourselves from spikes in the interest rates, while we still would benefit from a decrease in the curve. We are continuing to sell non-core assets, and thereby we will be deploying to the reduction of debt and to the improvement of our yielding portfolio, the proceeds. It is clear, and it will be further clarified during this presentation, how a diversified portfolio manages to de-risk having your operations only within one jurisdiction. As mentioned by the chairman, we are balancing growth with value strategy by having set a target on distribution. And we are making very important steps forward towards achieving our ESG strategy. The future outlook looks a little bit better. By reducing the LTV, we'll be able to reduce our exposure to interest rates, and also improve on the funding itself. We will continue to seek disposal to improve our covenants with the banks. We do expect, and Europe, Switzerland has started, Europe will follow. We do expect interest rates coming down, and the expectation is not only ours, but is driven and guided by the expectations of the major banks of the jurisdiction we operate within, and we try to align our budgets and our forecasts to their own view. Hospitality, this is the great news. The hospitality has bounced back, and it's no longer the 2019 is not going no longer to be the benchmark, but now we will be happily benchmarking around against the 2023, which in most of the cases have beaten the numbers of 2019, more on certain units than others, but overall a great year, and most importantly, a positive and steady outlook for the future. So yeah, we think that our actions are starting to yield the results. Thank you very much.
Okay, so I'll take it from ladies and gentlemen, and I'll handle the ESG slides that are going to follow. I think it's suffice to say that we believe that ESG is an important part of responsible investing, and that our commitment to ESG will help us create long-term value for our shareholders. So as an advocate of thinking global and acting local, the RDC sustainability framework is aligned to the UN Sustainability Development Goals. And by identifying areas where RDC can make a meaningful contribution to its stakeholders, the group has now embarked on a journey to focus on wider value creation. Included in areas of materiality are environment action and awareness, human capital, customer centricity, diversity, equity and inclusion, community upliftment, and ethical practice. Thanks, Avi. So environment is an integral part of our decision-making. We're focused on energy efficiency at the moment, with 29% of our portfolio by value having achieved a Green Building Council of South Africa Green Star rating. And we're currently generating clean energy with the support of solar on 14% of our portfolio. This year, we'll sign purchase power agreements for the installation of grid-tiered solar PV systems on identified properties across the portfolio, which collectively will amount to some 4 megawatts in size and an estimated 4 million rand per annum in savings. In addition, we will install smart metering across the portfolio, which, aside from monitoring energy performance, will enable us to assess our carbon footprint in accordance with the Greenhouse Gas Protocol, which is the global governance body that sets standards to measure and manage emissions. And we will also continue to monitor, as we do, water consumption, and which enables us to make timeous repairs to water leaks. Thanks, Avi. Okay, so the next two slides are around our social investment. The approved social CSI policy is in line with the group's strategy and contributes to its overall mission and vision. The group believes that it is fundamental to improve the lives of those living in disadvantaged communities in the regions in which we operate, and we embrace the aim of adding value to these communities. RDC's CSI initiatives have translated into quite substantial donations and actions, I think, which demonstrates our unwavering dedication to meaningful change. Through collaborations, contributions, and targeted efforts, we aim to enrich lives, nurture talents, and uplift communities. Our commitment to social responsibility remains a cornerstone of our ethos, and we continue to inspire positive transformation and to make a lasting impact. And you will see there are some notable investment initiatives this year on that, the prior and this page. I'm not going to go into detail on that. They are well documented on all our social media platforms and in various press releases that we are regularly put out. Then, of course, governance. The RDC board recognizes that good governance and strong leadership create confidence in its stakeholders. We have a strong corporate governance framework in place, and we are committed to high standards of corporate conduct. The robustness of the group's governance structures and processes were further confirmed by the outcome of the Botswana Accountancy Oversight Authority Governance Review, which took place in October of last year. And we furthermore have an equitable mix of independent and non-executive directors on the board, who collectively provide oversight and guidance to the executives and ensure accountability and transparency. And finally, gender diversity is an important value at RDC, with 45% of the board positions held by females. Thank you. I'll hand over to Joanne to continue with the financial results.
Gary. Good afternoon, ladies and gentlemen. Thanks, Avi. You can go. I'm pleased to present a very good set of results for the year, demonstrating strong growth. This slide just looks at some key highlights compared to the prior year. The investment and property portfolio has grown by 1.3% to 6 billion pula, despite sales of 138 million pula worth of non-core assets during the year. Particularly pleasing is the reduction in the loan to value from 45.4% to 40% as a result of using 100% of the proceeds from strategic sales to reduce debt and the increase in valuations at year end. Revenue has increased by 7% to 561 million pula, despite the sales, as a result of reduced vacancies and the improvement in the performance of the hospitality assets in the year. Profit from operations, excluding fair value adjustments, is up 13% to 309 million pula. This is due to the strong revenue growth mentioned and maintaining operating costs. The net asset value per shareholders has increased by 5.3% to 3.73 pula, achieved through the valuation gains on the properties and the bargain purchase gain recognized on the acquisition of the David Livingstone Safari Lodge, which I'll touch on later. Then the total return to shareholders is up 11.2% on the prior year as a result of the increased distribution and the growth in share price during the year. Thank you, Abby. Looking at the summarized statement of comprehensive income, revenue and net property income both increased by 7% for the year, despite sales. Profit from operations before fair value adjustments increased by 13% to 309 million, showing the strong growth compared to the corresponding year. Profit for the period is, however, down, primarily due to the increase in interest rates during the year and largely due to the unrealized fair value loss on the interest rate derivatives. This decrease in valuation of the derivatives of 55 million pula year on year is as a result of the hedges moving closer to maturity and the interest rate swap curve improving during the year. These derivatives have, however, protected interest rates, saving the group 16.8 million pula in interest expense for the year. Also included in the profit is the bargain purchase gain, which I mentioned previously, of 27 million pula, which arose from paying 27 million pula less for our 50% stake in the David Livingstone Safari Lodge than the NAV acquired. The distribution per linked unit is up on the prior year at 6.9 tebe for the year. And the profit from operations graph, which is in the top right corner, shows the large increase in 2022 when the Tower Group's income was included and the continued growth in 2023. Thank you. Next slide. The primary objective of the group has been to strengthen the balance sheet, which is evident by the reduced at year end. Compared to the prior year, the total asset value has increased by 1% to 6.2 billion pula, despite the sales during the year. The overall increase in the valuations of the property portfolio is 93 million pula, with 59% of the portfolio being independently valued at year end, which Jacob mentioned. The group equities are down 2% and equity attributable to shareholders up 4%, resulting in a net asset value increase of 5.3% for the year. The net cash from operations is up 18% to 295 million pula for the year. The group also successfully refinanced 142 million pula worth of loans during the year, and a 93 million pula corporate bond was renewed. Thank you. This concludes our overview of the group's interest rate and exchange rate hedging strategies. At year end, 16% of the debt was fixed and 24% hedged through interest rate swaps and caps. We've therefore been largely protected from the rise in the interest rates. Our strategy is to build up our hedge portfolio by capitalizing on opportunities where there are decreases in the swap curve, and we're constantly monitoring this. We are primarily looking at interest rate caps and interest rate collars at the moment so that we can benefit from the decrease in interest rates and are protected for any increases then. From an exchange rate hedging perspective, the group has a natural hedge as it has a diversified income stream denominated in multiple currencies. A further natural hedge is that RDC invests in and secures debt in the same country, thereby having its income and interest expense in the same currency. The are two graphs on this page, one showing the borrowing and one the portfolio value by currency, and really looking at the correlation between the two. So the group's loan to value is at its highest in South Africa, a region it perceives as more risky. As a result, we choose to maintain a lower equity position there. The group's loan to value on the contrary is on the lowest in Croatia, a region considered less risky. So we therefore hold a higher equity position there, which has positively impacted the group's returns. This balance is constantly monitored by management to reduce risk and maximize our returns. Thank you.
Sorry about that. I was muted. Thanks very much, Joanne. I'll just continue with some portfolio analysis. What you can see here is that diversification really continues to be a strength of the business, and is, of course, an intentional part of RDC's investment strategy. We believe this serves us well, and it also allows the group to benefit from income and asset streams denominated in hard currency, as mentioned, in our case, the euro and the dollar. The pula depreciated by 9% against the euro during 2023, and this, together with the uplift in value by some 5 million euros in the Croatian portfolio, accounts for the relative increase in exposure to Croatia, and I think is also testimony to the effectiveness of our diversification strategy. In addition, regions like Croatia and Cape Town continue to experience a high demand for retail and commercial space and low vacancies. You'll also notice that the increase in exposure in Botswana is probably a reflection, is a reflection of the increase in the value of the hospitality assets, in particular Chobe Marina Lodge in this case, as mentioned. Next slide. Right, so this shows our sector diversification. So clearly, our diversification strategy continues to guide our sector exposure. We've achieved a better balance between offices and retail. I think a contribution to this being the sale of non-core assets, mainly in Gauteng. Particularly noteworthy is the increase both in value and revenue of our hospitality assets, as mentioned. I think the long-awaited return of leisure travel marks a significant upturn in the hospitality sector, and we anticipate that the growth will be sustained in the years ahead. Of course, the inclusion of the David Livingstone Safari Lodge in 2023 has been a well-timed acquisition in this regard. Okay, so vacancy is a key performance metric, and the portfolio is starting to benefit from a sustained focus on deal making and tenant retention, with our overall vacancy ratio trending in the right direction, as you can see there. In fact, year on year now, for the last 3 years, we've had a sustained decrease in overall vacancies. In total, some 77,000 new meters in new and renewed leasing was concluded. And the graph in the lower left-hand corner is weighted according to revenue generation. So for instance, the large decrease in vacancy in Cape Town has a disproportionately positive impact on revenue, given that the region accounts for 36% of our total revenue. In other words, the vacancy reduction in the Cape alone accounts for an additional 2% to our total revenue. Conversely, the vacancy reduction in Durban, whilst we are pleased with that, with what has been achieved in terms of leasing there, has in fact a relatively small impact on revenue. I think what this graph also demonstrates is the potential opportunity gain as we continue to work to reduce vacancies going forward. Thank you. I think I'll hand over to Jacopo.
Yeah. Thank you very much. We will now go through prospects and developments on the next slide. The group has pursued, as you have heard from my colleagues, the selling of non-core assets, and to apply this clearly to the reduction of the debt under the circumstances, but clearly to fuel new investments. This slide is giving you a little bit of an update of what has happened with more detail than the previous slide. And you would see that 138 were sold during 2023 and accounted for because they transferred during the period. Another 197 million pula were sold during 2023, but were not accounted during the year. And during the first course of these 3 months, we can consider as done deals the forecast of 84 million disposal for 84 million pula equivalent for the coming period, which will not be the end of our disposal strategy. It is very important to understand that most of this money will go to reducing the debts under this interest environment, but the funds are also set aside to improve and keep meaningful our yielding generating assets. To the next slide, you will appreciate. We are now on the senior living, the silver economy, which we have identified of an area of possible growth, and especially currently in Botswana, but not limited to this jurisdiction. We have identified a partner. We are signing an MOU with this technical partner who will be in charge of the medical side of it. And we will then soon start engaging with potential investors to joint venture with us in this groundbreaking development. The Westlake development in Cape Town is doing fairly well. Reinvesting money from disposal has basically allowed us to secure these two local national tenants, namely Checkers and Clicks, which will basically revive and give another 10 years of very prominent positioning of that asset in the node. More interestingly, as said, as an opportunity is our diversification towards renewable energy. We have identified in South Africa and in the EU a partner, an international partner, very well reputed and recognized for its deliveries in the past few years. And through him, we will be giving effect of what Gary was mentioning before. We have signed the first power purchase agreement, which is basically the blueprint, and we are now virtually in the position to sign for the other 16 assets in South Africa. This will allow us to generate revenues from selling green energy to our tenants. And this is much appreciated, especially by more sophisticated and corporate tenants. So this is a confirmation of our move into the space. The group is also considering the creation of a new asset class within the group, which is to develop solar assets in Croatia on roofs of tenants, and our portfolio will be the enabler to do this. And we believe, as Gary was saying, that is showing how we're taking into consideration the ESG KPIs while we make all our business decision. So ESG becoming an integral part of our investment strategy. Last but not least, you would have seen cautionaries in Q1 on the Botswana X News, where we were informing the unit holders that we were engaging with major stakeholders and the BSC on appropriate corporate action to be taken for the foreseen opportunity. We believe that the corporate action that we are envisaging will not only basically unlock synergies, but will unlock serious potential for both the sets of unit holders. As mentioned in the cautionary, the unit holders of the company are advised to exercise caution when dealing with the units of the company. Thank you.
Thanks, Jacopo.
To the next slide.
Yeah, thank you very much. So you've all heard from my colleagues. Thank you very much for their presentations. Coming back to the goals and our strategic goals, what we see in 2023 demonstrates that we're working stable towards these goals. Sustainable growth clearly is not yet at 3 to 5% above inflation, but we are working towards it, and we're working towards optimizing the portfolio. The reduction of debt is happening, as we've heard from Joanne, and this will hopefully, with the interest rate environment that is proving a little bit more positive going forward, this will translate in a higher dividend in the future, which is positive. And if you look at our hard currency exposure, that has really, that category of assets of ours have outperformed the other assets. And so we believe that those goals set by the board are really adding value to the business, and we will continue towards that and reassess their numbers and how we can continue improving on those. Yeah, the corporate action cautioned on the market, the reduction of loan to value. We goals of the group, and will achieve. Ready here to take all questions. When you want to ask a question. Thank you very much. Mark. I don't see any question. It might be because the first question is usually the one that is the most difficult to come. I see a hand. Good afternoon. Can you please unmute yourself?
Good afternoon.
Hmm?
My question is from Corey Capital. I just wanted a bit of clarification on the cautionary that you released vis-a-vis the one that Prime Time has released. I just want to find out, has a formal or whatever it may be been made to the Prime Time board as it relates to this proposed transaction?
I will answer that one. No, it has not been done. You will X news when it happens. We are guided by the process is a long one. We engaged during the last month. We've engaged with the BAC, as was mentioned in the cautionary, and we have now appointed a transaction advisor that is taking us through the next few steps. You will be advised, and there will be engagement with some of the major shareholders in the next few months, in few weeks. So that is all happening as we speak. The last month has been taken in re-engaging with few shareholders, but mainly with the BAC.
Okay.
I see there is a question. Yeah, is that sufficient information?
That's fine for now. Thanks.
Thank you. Yeah, there is a question from Quirk. Could you please tell us more on the outperformance in Gauteng, given that overall vacancy reduction has been marginal? Can you please answer that one, Gary?
Yes, certainly I can. The reason for the marginal vacancy, it's a little bit of a pity. We did lose an anchor tenant at the shopping centre Evergold, that being Builders Warehouse, who declined to come back after COVID, and we had to enter into a settlement agreement with them on the remainder of their lease, and that large premises remains vacant. The Gauteng did overperform, and had to do with credits that we received back from putting our challenging certain of the valuations, the rates valuations, as well as engineering our expense budgets. We achieved a lot in realigning our SLAs and reappointing security and different managers at the sectional title units, and all of that collectively resulted in a better than budget revenue or NOI result in Gauteng. Having said that, as you can see, there remains the vacancy, and as I mentioned earlier, also the opportunity.
I see Bongani. Quirk, any follow-up on your question before we pass to the next question?
Yes, thank you for asking. Could you please speak specifically to Gauteng office? Has there been any sort of improvement there, specifically the office segment?
Quirk, no, there hasn't been. Look, having said that, in our A and premium grade offices in Grayston Road, we have seen a take up of another floor of one of the buildings that was not previously let. So I mean, it's small gains, but you know, that I can report positively on. What has happened in this year is all of a sudden a number of deals that are currently on the table. It's remarkable, but it's been a very busy quarter, both on the well, mainly on the office side in this case. So perhaps your question is timeous in the sense that you know, at our mid-year we'll have something positive to report in that regard.
Yeah, hope that answers the question of Quirk. Thank you. Bongani, I see that Bongani was asking me a question. Then I will take the question of Kaone. Bongani, thank you.
Okay, hi. This is Bongani from Ruler Capital. I just wanted to know, how does the company prioritize allocating capital between dividends and reducing the LTV? Thank you.
Joanne?
So we generally aim to pay in roughly 90% of our distributable income as a dividend, given that there is free cash flow to do so, and given that our loan to value is at a sufficient level. So we would pay the distribution now because we do feel that the loan to value of 43% is not risky. We are in a de-risk position. We still aim to get our loan to value down, and ideally we'll use the proceeds from the sale of assets to do that and distribute our distributable income to our shareholders.
Thank you, Bongani. Kaone?
Good afternoon, everyone. It's Kaone from Vunani Fund Managers. I have just one question regarding the David Livingstone acquisition. There was mention of how RDC paid 27 million less than the NAV, the 50% NAV. Outside of this, are there other financial perhaps metrics that you have that would further convey the upside potential of the transaction or the value accretiveness of this acquisition? Perhaps if you shared other ratios that were involved at the point of acquisition, maybe EV per EBITDA, that would further strengthen this discount. Yes, I think I'll stop there. Thank you.
Yeah.
Maybe
Jacopo, do you want to talk about David Livingstone and the potential income and compared to the cost?
Absolutely. Joanne, you wanted to say something, I think, on the bargain purchase gain?
No, I think we've mentioned that. I think the only thing I wanted to add is that we revalued the asset at year end, and there was close on a $4 million uplift on the price, on the value that we acquired the building for, and when we revalued it at year end. So there was a valuation uplift as on top of the bargain purchase gain.
Okay.
Thank you, Jacopo. Carry on, please.
Very much. Yeah, on my side, yeah, clearly one metric, the acquisition happened during this year, right? So we couldn't present the set of results. But suffice to say that we, as a group, we look at IRR quite substantially, and already in the first year, the IRR for that investment would be north of 15%, and that is prior to a full rebound of the STOs, so the international travelers, and the property improvement plan. So basically, in virtue of our acquisition and the fact that we took control and start to instill corporate governance and controls into the lodge is already producing very well, and we look forward to deploying cash into it, which was original, as per the original plan, so to be taking advantage of higher rates for the rooms and the buoyant market. So we see this not only from a growth point of view, the revaluation on the property at year end, but the cash flow that can be derived will produce IRR above what is usually the threshold for our investments, and it is in hard currency.
I might just mention some figures. We bought the property for 5 million the debt and 1 million the equity, so roughly 6 million. The operations, the GOP of this year is in the region of $1,100,000 first year, and we anticipate 1.4 to 1.5 million next year. So that gives you the parameter. This is amazing returns. And this is before refurbishment. We will, well, the 1.4 is assuming that we do a refurbishment. We haven't started the refurbishment. The refurbishment will cost in the region of $1 million. And that will clearly the return on that money is very, very rapid at those. Response to you, Kaone.
Yes, no.
Thank you. I see Mr. Mokosi. Oh. Is there a question there? Sorry.
There's a question in the chat.
There's a question in the chat. Okay. Yeah. I think we can respond to that one. In our preliminary model, we expect the loan to value to reduce because we consider that there is a potential to unlock value because of the scale of the combined portfolio. We think we can sell a substantial portion of those portfolios of the combined portfolio, and thus reducing to value to below the 40% threshold that we are setting for ourselves. And we believe that it will be accretive.
That's fine.
I don't know. No, we're not. I'm not on mute. Did you hear that, Mr. Matale? Mrs. Matale, I don't know.
Yes, thank you, Guido.
Yeah, thank you. The effect is both accretive from a revenue and especially loan to value, and that's the real. We believe that doing it, combining the two portfolio will have a rebalancing of the portfolio global, and will give the opportunity to reduce the loan to value and to grow the portfolio more organically by having reduced the loan to value to roughly 37 to 38%. That's the model we are working with. Not sure if there's any other questions. I don't see any hands up or anything in the chat. Going to my second screen. If there are none, I would like to thank you all for the attendance. And as we do generally, we are available for any questions following the presentation. We are who is listening here, Leds was here. He's switched off his camera, but Les was here. Les is always here next to me in the office here in Gaborone, with Jacopo here. We are all available to answer questions, and we are happy to come to your offices to discuss them. Thank you very much, and I do apologize for having moved to the meeting to 2:30 this afternoon, but that was because we were informed, and I'd like to thank Mr. Guma for Gary Juma for having informed us that BIHL was having a result presentation this morning, and it necessitated a change of time. Thank you, everybody, for participating, and have a nice few months ahead for this year. Thank you very much.
Thank you, and congratulations.